Creating shareholder value. I have done videos on this in the past, and I made a lot of notes on this, right? How shareholder value is to be created from various sources, nothing original. I don't do anything original, right? So I may have to read something from somewhere rather than just talk to you. So what is creating shareholder value? Creating shareholder value is saying my market cap was so much, now it has become so much, and therefore I have created value for you, which is the way to look at it. Now very many big groups, I don't wish to name them, very difficult to name them, have chased market capitalization by entering businesses which they didn't know. They made a big mess. They wrote off huge amounts of money, and now they're back. They've just given up that business, right? So those kind of things happen. So right now, I'm afraid that there are 2-3 big groups, very reputed, which are chasing market capitalization, and to me, that's a big scare. Fairly obvious. Many of you know because of my tweets, etc. But I will not name the group. But largely, if an executive comes and he knows that his time is limited, it does not belong to him, but he is running the group for whatever it is, chances are he will want to evaluate himself on market cap, which is very fair, because it means the chairman's interest, the family, the owner interest and the shareholder interest or the small shareholder interest is aligned. That's what we thought it would be, because in the 1990s people thought the way to compensate an executive is to give him equity shares so that he or she will be interested in creating value for themselves in the long run. So that's the best way to go. However, human nature being what it is, people found ways of creating short-term wealth and then destroying it completely. You have WorldCom, Enron and many such tens of thousands of Indian corporates which came. They thought they will create market capitalization, they couldn't, then they just ran away from that business, whether it was telecom, retail, financial services, doesn't really matter. Financial services has not created great value for some of the biggest Indian groups, right? For some it has, but for many it has not. So chasing market capitalization is not the best way, and then blaming the market, saying, oh, market put pressure on us to create market cap and therefore we did it, it's absolutely ridiculous. The market has not done anything wrong. You have misused the market, right? So let us accept responsibility that we have misused the market. Now I'm coming to what can be done to improve shareholder value. So this is just an introduction to that. So of course a lot of things can be done. A lot of the short-term thinking and all that. So let us just enumerate what are the things that can be done. Of course, there is no point in blaming the junior level executive. He does what is at the bidding of the owners or the people who behave like owners, right? So you take companies like say Larsen and Toubro or ICICI or Axis Bank. They don't have a very clearly identified promoter. In HDFC Group, Mr. Deepak Parekh behaved like a promoter. He was an employee, remember that. So there was some sense of purpose, sense of direction, saying, oh, this man will not like it, we should not do it. Once it is just run by executives, then to say that the executives should create long-term wealth over 10, 20, 30 years is wrong, simply because some of the companies may get sold, it may get acquired. So the shareholder may be, how many shareholders of HDFC Bank are holding shares from 1994 and not making any changes? Some of the employees are, which to me is risky, but yes, very few people would be holding shares for 30 years, right? So it's more like 3 years. So for whom should we be creating value? For the guy holding for 3 years or the guy holding for 30 years? Why should I create more value for the guy holding 30 years? These are philosophical questions, but other than that, a company's ability to invest based on the level of competition, what it should be doing in the market, how much R&D it needs, should be driven by the market situation and the quality of decisions it can take, rather than by the list of shareholders saying, oh, this fellow will like it or this fellow will not like it, right? So you cannot do that, because especially in a large shareholding company with 1 million shareholders, how are you going to know whose interests are you reflecting? But largely it has been accepted all over that long-term capital wealth creation means running into decades and generations and not weeks and months, right? So this is very important. So let us see what all they should do. I mean, it does not take very great effort, but if you take companies like Berkshire Hathaway, He's not really bothered him that he's underperforming the index over 10-15 years, or there are portions in time when he's underperformed gold. It's not bothering him. He's not going into that competitive misery and saying, oh, that guy has done well, this guy has done well. He's saying, this is how I am, take it or leave it. That is exactly how you should behave towards your investment. I need so much return, I am getting it. I don't really care what other relatives of mine are getting, right? So first of all, I think, and I've seen this, I'm convinced that the company should not give a earning guidance, because when you give earning guidance, you will do anything to meet that guidance, so that people say, wow, this company gave a guidance and stuck to it, I'm very impressed. But I can 100% convinced that it's a manipulated thing, because in my life, I am unable to predict the next 15 minutes what's going to happen. How are you going to predict for the next 90 days what is going to happen, especially if you are a huge company, right? Your earnings in 32 countries, you are earning, so you have to know how much you will sell, how much you will deliver, what will be the currency, and you have to multiply all this to say, oh, my EPS will be 6 rupees this quarter. How the hell can you do it? It is not worth it. It is not worth the exercise. Saying our direction is right, we are adding clients, this is what is going to happen, so maybe we will grow at 8%, 7%, 4%, whatever. And instead of saying, oh, my EPS will be 36 rupees 12 paise, that is the kind of madness to which we are going, and we are rewarding saying, wow, this company is so accurate, it is all, it gives what it says, which means the company is either building a cushion, or it is already building a cushion from which it is withdrawing. It is almost impossible to predict in this world the next 90 days of a company, howsoever, whatever business it does, whether it is a commodity, whether it is a branded product, whether it's a service. So I think first thing is they should stop giving these quarterly predictions and quarterly, annually, whatever. They should just stop doing that. It does not make any sense. Another thing which is a little difficult is to say, we will take decisions on the basis of what is good for us in the long run. Now this is a little catchy, because it's a very nice thing to say, but if a biocon says, no, we will continue to do research, our short term thing doesn't matter, then people sell. You see the PE drop when it happens. So you have to decide whether you are commercially going to run it, or say, okay, I have a subsidiary which is not listed, which does not have to worry about quarter on quarter, and that is going to do research, and I will pump in so much. So I'm willing to write off so much from the P&L, saying this will go into research. But if the main company is in research, it's a little difficult. So to think that the guy will make, or the girl there will make decisions on the long term is very difficult, especially if they're holding ESOP and they know that they're going to be judged on a quarter to quarter basis, saying this is what the people think about your research. People don't think so much about research. If your research is 10-15 years, it is not going to impact the earnings call. But then some guy will say, who knows what will happen over 10-15 years, so they'll put a sell call on Biocon and the price will fall. So I'm just quoting Viacom, but that is true. There is tremendous pressure to be short-termism, to have short-termism in your view, but the logic is long-term wealth creation is far more important, right? Even when I heard of a French company which wanted to do an acquisition in India, and I thought they were overpaying. So that guy actually said, the fact that we announced a takeover in India, which is a very important market from our point of view, our market cap, this is very careful to hear, our market cap went up by an amount greater than what we were going to pay for it. So this company was clearly buying to improve its market cap, which is fine, which is what it should be. But is it good for the company? Is it a good fit? Those things didn't matter. They first announced and then they were shopping around to see what to buy, right? So then you know that there is tremendous pressure to close a deal, some deal. Kuch to band karo yaar, we are a French company, we need to close something in India. So that's how desperate they were to do some acquisition. I have no clue whether they actually did. Right, so sometimes, and that could be wrong, that could hurt some of the shareholders in the longer run. Even in the shorter run, it could hurt shareholders, right? When you look at the company's balance sheet as a company, see what does not add value. If you have too much of real estate, sell and go to a rented place. Maybe that will make sense, right? So see what assets you have, see which will create value in the longer run or even in the short run. If you can't find those assets, something is wrong, because every asset, every company gets some junk into its portfolio, right? Look at Elon Musk. He sacked 8,000 people out of maybe 8,500, and the company is not doing too badly, it's still doing well. So some dramatic action like that may be needed for many companies. So if you have a surplus and you don't know what to do, pay out good dividends, because the shareholders respect companies which pay out cash. It means the earnings are not fudged, right? So I'll take it to the next one. This is getting too long. One way of creating value in the world is to hold on to things which you think you are very good at, and outsource lower end things like manufacturing. Not very many people think that manufacturing is a high end process. So take a case, I mean, Apple is a good example, where the designing and the thinking is done in the US, in California, and the manufacturing is done all over the world, including China, Taiwan, and India, right? So all these places are manufacturing, but the main job is that of Apple in California, right? Or take the case of Kmart, where it was acquired by a venture capitalist who came in, kicked out assets which were not very useful, and created wealth for the shareholder from $1 to $100. Obviously, the shareholders would be asking, why did the old management not do? But the chances are the guy who got you into trouble is not the guy who is going to pull you out of that shit where you were. So chances are that somebody new will come and do it. But again, this is very scary, because that guy can come, or that those people can come and they can completely destroy value by not understanding costing and not understanding what goes together, right? So suddenly you close down 2 divisions, you find that your overheads are too high. Or see what Musk did in number of sackings that he did, right? So having the guts to throw deadwood out, right? That's not everybody has that. And because of this, if you generate cash and you don't know what to do, very important, give it back to clients, give it back to your shareholders, give it back in the sense that do a buyback or give a huge dividend. Recently 3M India gave a dividend of 850 rupees per share. Of course, I'm not even recommending the share at 24,000, but I'm saying that is a big dividend to pay, right? So you have cash, you don't know what much to do about it, so you just give back the cash to the people. So when you don't have any sensible thing to do, don't keep on increasing your fiefdom by saying, oh, we will get into this business and that business. Like, if you're in financial services, maybe you're in lending, maybe you are a credit card company, everything else also looks attractive. So you want to have a bank, you want to have insurance, you want mutual fund, then you realize that, oh my god, we could become too unwieldy. I believe a couple of mutual funds are up for sale, because their other businesses for the same group are doing so badly that they need to fund it, and they think that they will be able to sell their mutual fund at a good price. But I'm not hearing very encouraging news. So sometimes you get into businesses which you don't understand, which you think that, oh, everybody is getting into it, kind of a thing. So that does not make any sense. So don't do some ill-advised bad expansion. Whatever you have, if you don't know what to do with the money, give it back to the shareholders. I think also one more thing which shareholders can do is start rewarding the executives in terms of compensation with a longer vesting period. So a 10-year vesting, 7-year vesting, 5-year vesting, 3-year vesting. So it will force the executive to think for 10 years, and all the executives, not just the CEO, all the executives, when you start compensating for the long run, when you start compensating in terms of the user feedback, of saying what percentage of your sales comes from repeat customers, right? When you start asking those questions instead of just asking next quarter what is going to be the EPS, you're treating the employee very well, right? Like if I go to a fund manager meet, I don't ask the fund manager why you have picked this, why you have not picked it. I ask broad philosophical questions. For example, I think PSUs were not very well run in India some time back. Not that things have changed, but somebody is perhaps talking of the share, somebody wants to do an IPO, NFO, FPO, whatever it was. whatever it is to improve the liquidity. Something is happening. So you then ask such philosophical questions rather than saying, oh, why did you not buy BHEL, why did you buy NTPC or stuff like that. That makes no sense even for the shareholder. But yeah, people do ask those kind of questions. So rewarding people, including the CEO, for the long term makes a lot of sense, and therefore you could be creating shareholder value. When you creating shareholder value like this through employees, make sure that more shares are offered at the longer end than at the shorter end, so that that guy is not interested in creating some share jump in the market. Executives have done that when they did LBOs, when they took ESOPs, they played all dirty tricks. So companies with lot of ESOP is also dangerous, because there could be a lot of insider trading. So beware of that as a shareholder, and as a company be aware that these kind of things do happen. Everybody has to be awarded with shares, right? Middle level, lower level, everybody, but give 10 year, 7 year, 5 year, 3 year kind of vesting, right? When the employees are shareholders, make sure that they pay a reasonable price for it, because they have to take the risk. If you give a 1,000, 10,000 rupee share, whatever, let's say a 5,000 rupee share, and you give it at 25 rupees to the employees because you want to give it to them at a particular price. Today it's not possible. There is a SEBI ruling on that as to how the pricing should be done. But largely, if you think that by giving ESOP people are going to benefit, yes, of course people are going to benefit. Even as a shareholder, you are going to benefit, but it should hurt them when things don't do well. It can't be just that they get the upside and nothing of the downside. They have to be impacted by the upside and the downside. Then perhaps they will be little more careful about what they are doing, right? So I think companies also have to manage the expectation of the new shareholder, of the old shareholder, of the institutional shareholder. Institutional shareholder may not want any dividend because of the way dividends are taxed, but the small shareholder may want the dividend. Of course, small shareholder can be told that he could participate in the buyback, but not everybody understand. Berkshire Hathaway in the last 40 years has not paid any dividend. Do you want to run their company like that, or do you want to say, no, but I don't have anything else to do with the money? So if I'm a Zomato today, I wouldn't be paying dividend. But if I'm a Colgate or a HUL or somebody who does not need so much money that they are generating, it's fairly obvious that they will get into bonus, split, whatever you want to, plus maintain the dividend, right? So that's it. Thank you.